StockMinter.com here in the beautiful Black Hills of South Dakota. I'm your stock minter, Brian Johnson. We did see a run up in the markets today with the Dow leading the way and the Nasdaq the lagger. So we see quite a bit of switching back and forth between the leaders and the laggards within the indices themselves. But overall, everything was up. Nasdaq just barely up, but still up nonetheless. Pretty strong run by the Dow today. Up 0.8%, kind of catching up from being a laggard the last few sessions. So where are we at? Well, let's look at the Dow chart, and you can see we broke this overhead area we were talking about. We got up and above the 12,150 area, had targets of 12,250 to 12,300 in mind for this move. We didn't quite make it, but we did make 12,232, pretty close to the 12,250 mark at least, giving some opportunities for you traders out there that follow along. And overall, for you swing traders, we did get up and above, and we stayed above the 20-day moving average. That was one of the other levels I told you to watch and to see if we could stay above that for any length of time. Going back to the 60-minute, you'll see that's about where we pulled back. We broke it, we came back to retest it, and then we moved back up again. So very close to struggling and working on this 20-day, most of the 20-day moving average, most of the trading day until the end where we shot up, got past it, and now have closed above this 20-day moving average. So we're still going to watch now these overhead levels I gave you, 12,250, 12,300. That'll be the next levels we'll watch. And then above that, can it make it back to retest near or close to the top of this last move? I'm still very neutral on what I see here, guys. It was a bullish day. We had a bullish move, but overall, the internals once again just they weren't there. They were okay, but they weren't strong either way, whether it was bearish or bullish. So once again, that's going to make me more neutral right in this area that we're looking at. I'm not sold on any of this for the time being, but as it is right now, charts are still bullish, at least for these first few days, or at least for the first day of the week, and that is above the 20-day moving average. Now, as we gave the bulls a chance to get back above it, let's give the bears a chance. I'm not going to be surprised if we maybe dance sideways here for a little while, up to this area and maybe back down again and maybe up, who knows. We could end up just kind of in a trading range here for a while, and that is why I'm giving you these other levels to watch. I really want to see those broken before I make any judgments. Here was that consolidation last week, the move up right into where? Overhead resistance. You get these lines right, it makes a big difference in your trading. That's where we gap to today. You can see the run, the hold, and then the move back down. Nasdaq finishing basically break even for the day, but more importantly, what? 2350 puts us where? Right above that 20-day moving average. Just barely, but yet, whatever. Call it at, call it on, call it above. I don't care. It doesn't make a difference. But we are now back above that 20-day moving average. There's some other things to be looked at in through this area, but the more important one being the 20-day. If you guys like to play the Nasdaq, we've got some really good stuff going on in the subscribers newsletter. I do a lot more lines, so I have trend lines and all kinds of stuff drawn in on my Nasdaq chart on the subscribers charts. I only do so much for the daily videos, but it's enough to get you guys going and at least give you ballpark ideas of what to look for. So right now, it's the hold of that 20-day moving average. Okay, on to the weekly. You can see we just started the week. I'm not going to talk too much about that till the end of the week. I want you to keep in mind, though, that today is what? The end of the month. That's right. So now we enter a new trading month as of tomorrow. A lot of times people will say, oh, March is going to be bad, or February is going to be bad, or whatever month is going to be bad, and then they expect that to happen right on the first day of the month. I don't really see that. That isn't very common to see that type of stuff. You do see, sometimes you see some pretty decent moves on the first days of the months, but overall, I don't think that's necessarily true. So tomorrow, yes, it is March 1st. We got to look for breaks and watch for breaks of certain levels, but I'm not expecting anything too major tomorrow. Maybe closer to the middle of the week for the time being. SPX 60-minute 2, we got that push up. This one looks strong coming out of last week. You can see it break this overhead level, come back to retest, and now back up again. Little bit of choppy action. Once again, if you are a day trader, this is tough. This can be very tough to trade in through here because it's pretty much sideways. We're basically 10 points high to low, and it's up, it's down, it's back up. So very difficult to trade. Don't be surprised if maybe you get your hand slapped a little bit within these trading type days. But I think, there's some good opportunities up and above these 1330 levels, maybe back below. I'd really let it get back below some of these lower levels before I get into it. But you can see overall we had the big push down, now the little bounce up. Continuation with that move today takes us back about 0.5% up, takes us right back near that 1330-ish area, 1325 to 1330. Watch that level carefully. 2 days now, back above the 20-day moving average. The bulls, once again, break below only to break back above and do the same thing over here. This one took us a little deeper, but yet, once again, claiming this 20-day moving average. Let's see if we don't dance back and forth with this 20 for a while and see if that doesn't lead us sideways here. That's really what I'm watching. Still looking at breaks up and above these levels I gave you. Breaks back below maybe some of these lower levels here give you opportunities to the short side. But I really want to see how well this 20-day does against the market over the next few days. VIX on a daily, back into our channel that we've been talking about. It's the same old, same old. Now we're getting this push back down into the channel after a big spike up last week. You can see it start to bleed out. Now we're not done with the week, and I kind of like tracking this better on a weekly than I do a daily. You can see us retesting the 20-week moving average here on the VIX. Let's just see if this blue line can hold by the end of the week. That's really what I'm most interested in. Staying at or above the 19 to 20-ish mark over the course of a few days or a few weeks, ultimately, I think could be more bearish for the markets overall. Apple 60-minute up very well today. Back into the 350s. If you can't beat it, gap it. Here we go. Move up, pull back, move right back up. So same type of action that we're seeing in Apple that we saw in the SPX, and that is choppy. If you're day trading, this is a good way to get your hand slapped a little bit unless you really know what you're doing. But from a daily, you can see us. If you can't beat it, gap it. That's right. Get right back up and above that 20-day moving average, and it's holding so far. That 20-day is now at 351, and that will be the mark to watch going forward to see if that doesn't give way over the next couple days. If we can keep strength, get back above that 355-ish area here and continue to push our way up, I think 360 and potentially retests or close to being or retesting the top of this could be in the cards for Apple. From a weekly too, we're pushing, getting close to that overhead blue line. We'll watch that as the week progresses. FAS. Gap up, hit some overhead resistance, pull back. So 33 is still one of my bigger areas of overhead. We got about 9 cents from it today before we saw the pullback. Once again, choppy. So we did finish up for the day, but guys, recognize how the up moves are happening, and that's a gap, back down, back up to about where we started the day. So yeah, we're up for the day, but we didn't slide our way up. We gapped our way up and then kind of just chopped sideways. That makes for difficult trading if you're a day trader sometimes. Here's that overhead area that we're holding at, that 33 area. So we're still looking below now 32 and above 33 for any entries on your FAS. And from an FAZ standpoint, guess what? Gap down, not a gap up. Come right back up to retest the 50 and push yourself right back down again. So here we go, back below 38. I think retests this blue line. That'll certainly be the target I'll be watching on a move to the downside here. Back up and above, man, I'd want it to clear some of this area up here. I'm just not sold on FAZ to the long side. I haven't been for a long time. So I'm still, back above the 50 is still my target for you guys if you want to get long this stock. And it's a ways away, but I don't care. It's the most conservative, best place to get in my opinion. So we're still watching for these breaks back down here, and once again, this thing happens to find its way below 37. I got to target this lower blue line again. So let's see if we don't get some sort of, sideways action, choppiness. Let's see if the markets can move this sideways. This is more of a test for the bears than it really is the bulls. The bulls have not had a problem pushing this market around, but let's see if the bears can try to find a little bit of swagger like they did last week, and that would be trying to, push the market back down a little bit, maybe even sideways somehow for a while, trying to keep it in a range where they can try to regroup and get ready for another push downwards. It's just anybody's call right now. I'm still very, very neutral on these markets. Watch your levels and be careful. Be careful with your trading. Okay, and for those of you, I always do this on Saturday or Sundays, and now I'm doing it again on Mondays. I'm going to show you what we did last week. I had for those of you that signed up for the newsletter this past weekend, you woke up this morning to a stock that ran just over 3% by the end of the day. It was almost up 4% at one point during the day. So we had some very good entries on that. We didn't catch all 3.27% or whatever it was of that move, but we got a good portion of it, and we got a very nice trade on our hands. So for those of you that signed up for the newsletter, you should have been in. You had entries and everything else for you. This is what we did last week and what I took off the charts from the subscribers video last week, and that was ABT. This is obviously giving us today's stuff as well, but this one was up and over 47 for our trade last week, so you're going to have to ignore these last candles here because this is all today's stuff. I told people that were in this trade to stick with it. We had our target set up here right around 48, so overall it played out pretty well. ADP came up to retest. This was one that really moved sideways on us. We didn't get much of a trade on this. We finally got an opportunity maybe today for those that stuck around, but otherwise this one came off my chart. It really moved sideways. AVD on a 60-minute was a good stock to trade in the $8 area, but we didn't get much of an entry on that, and we still don't really have one as of today, but this was on my charts last week. I took it off because it wasn't moving. I give it a chance to move, but then if it isn't going to make us money, then there's no sense in having it on there, so I take it off my lists. And Coach was another one we had on, and we caught it below these moving averages last week, so ignore this last one. It is still holding well here, but we had it below the moving averages, made a little bit of money on this one. So I've got one that we've had on now for about 3 weeks, so it isn't just day trades that I put on my stock list on the subscribers list. I do put swing trades on there, and I give both daily entries and swing trade entries, and giving everybody an opportunity to trade it the way they want to trade it. I give entries and exits and targets, and there's all kinds of extra trend lines and support resistance lines drawn on, plus it's a much more deep video. A lot of times it runs anywhere from 16 to 20 minutes in length, just so I can get through everything and show you all of the extra stocks and what we're trading going into the week. I want to make sure you guys are always prepared. So anyway, there you have it. If you guys are curious about what's on the subscribers newsletter, it's stuff like this. I also cover other indices. I cover some different commodities that I don't do in the daily videos, just in the best interest of time in most cases. So if you're interested in other indices and different commodities, the subscribers newsletter is for you. Try it out. $28 just off to your right here in a little ad, and click that ad and sign up for it via PayPal. We'll see you guys again tomorrow night. Bye.